Another day, another sea of red. Extreme fear has the market in its icy grip at a 9 on the Fear and Greed Index, and Trump policy risk just hit level 3. Welcome to Denver Stock Lab, where we bring in engineers' precision to tech stock analysis. Today, we're dissecting the semiconductor giants, NVIDIA, TSMC, and ASML. Let's dive in. Alright team, let's dive into NVIDIA, ticker NVIDIA, which had a rough day, closing down 2.17% at $167.52. This dip aligns with broader market jitters, especially with those renewed trade war fears swirling around Trump's latest policy moves. Remember Jim Cramer saying you're just getting a chance to buy a high-quality name? Well, today felt like that chance. With the stock now below both its 20 and 50-day moving averages, it's signaling a clear downtrend retail investors need to watch closely. NVIDIA's fundamentals reveal a strong growth trajectory, with 95.6% EPS growth and 73.2% revenue growth. The company beat last quarter's EPS by 3.6%. With a market cap of $4.1 trillion, insiders have net sold shares, a potential caution sign. Wall Street is bullish, with 67 buys, seeing significant upside. The price-to-earnings ratio, or PE, is not available, but EPS growth suggests a promising valuation, indicating the company's earnings per share are increasing rapidly. The RSI, or Relative Strength Index, is at 31.4, indicating NVIDIA is oversold. The moving averages, which show us the stock's average price over time, are above the current price, suggesting downward momentum. We're watching support at 167.52 and resistance at 186.03, with bearish momentum building, as shown by the MACD, indicating selling pressure is still present. The bull case for NVIDIA is strong, with a 92% bullish analyst consensus. The catalyst is the potential launch of new gaming GPUs, like the GeForce RTX 40 series, which could drive significant revenue growth. With the US-China tech war posing risks, watch for the CHIPS Act's impact. Monitor the stock's resistance level at $186.03 over the next few weeks. Breaking news, TSM just closed up 0.19% at $326.74, defying the market plunge sparked by Trump's trade war fears. Despite the extreme fear sentiment, TSM's bullish session suggests investors are looking past the uncertainty, and with a 95% bullish analyst consensus, retail investors should take notice of this tech giant's resilience. TSM's fundamentals reveal a strong growth trajectory, with 35% EPS growth and 20.5% revenue growth. The company beat last quarter's EPS by 5.2%, showing positive momentum. With a Wall Street consensus of 41 buys, insiders also net bought 1,000 shares, signaling confidence. The price-to-earnings ratio, or PE, is not available, but EPS growth indicates the company's profits are increasing, a positive sign for investors. The RSI, or Relative Strength Index, is at 38.9, indicating TSM isn't oversold just yet. The moving averages, which show us the stock's average price over time, are all above the current price, suggesting downward pressure. We're watching support at $326.11 and resistance at $368.07, with bearish momentum building according to the MACD, so we'll see if TSM can hold these key levels. The real catalyst for TSM is the upcoming ramp-up of 3nm production for Apple's new iPhones, driving the bull case with 41 buy ratings. With the US-China trade tensions simmering, watch for the impact of export controls on TSM's production. Monitor the $368 resistance level over the next few weeks for a potential breakout. Breaking news, ASML plunged 2.03% today to $1,302.47. This drastic move is likely linked to Trump reigniting fears of a trade war, as seen in the headline market's plunge as Trump reignites fears of a trade war over Greenland. With ASML's significant R&D investment, retail investors should care about this downtrend, especially given the current extreme fear sentiment in the market. ASML's fundamentals show a steady growth trajectory with 7.2% EPS growth and 4.9% revenue growth. The company missed last quarter's EPS by 4.8%, but Wall Street remains bullish with 33 buy ratings. The price-to-earnings ratio, or PE, is essentially a valuation metric, while EPS, or earnings per share, measures profitability, indicating ASML's strong financials, although its recent miss may raise some concerns. The RSI, or Relative Strength Index, is at 42.9, indicating ASML's price isn't overly strong or weak. The moving averages, which track price trends, show a downward tilt. We're watching support at $1,292.80 and resistance at $1,423.54. With a bearish MACD, momentum is fading, suggesting a potential downturn, as the shorter-term average is below the longer-term average. The bull case for ASML is strong, with 33 buy ratings and a high price target, driven by CHIPS Act funding and AI accelerator demand. The US-China tech war is a key catalyst, with the CHIPS Act supporting US-based customers. Watch for the potential increase in EUV system sales to US-based customers. Monitor the $1,423 resistance level. Breaking news: Micron Technology just closed up 0.5% at $357.22, a bullish session amidst extreme fear in the market. With its worst week of 2026 behind it, Micron's earnings season may be the turning point, especially with its HBM4 now in mass production for NVIDIA's next-gen platform, a significant development to watch. Micron Technology's fundamentals reveal a strong growth trajectory, with impressive EPS and revenue growth. The company beat last quarter's EPS by 27.3%, showcasing its financial strength. With a beta of 1.54, it's more volatile than the S&P 500. Insiders have net sold shares, a cautionary signal. Wall Street overwhelmingly favors the stock, with 49 buys, indicating a positive outlook. The RSI, or Relative Strength Index, is at 42, indicating Micron's not oversold, but has room to run. The moving averages, which show us the stock's average price over time, are all above the current price, suggesting downward pressure. We're watching support at $355 and resistance at $461, with bearish momentum building according to the MACD, so we'll see if Micron can break through these key levels. The real reason to watch Micron Technology is the strong demand for its DDR5 memory chips, driven by cloud and AI growth, with the US CHIPS Act providing a catalyst. Analysts are bullish, with 91% buy ratings, making a strong bull case. Monitor the upcoming earnings report for a potential turning point, specifically the release date. Breaking news: Applied Materials just closed at $337.17, down 0.41% today. With the Middle East tension sparking a chip stock sell-off, as seen in the recent headline NVIDIA, AMD and Intel lead chip stock sell-off amid Middle East tension, this move is no surprise, and retail investors should take note of the current consolidation phase. Applied Materials fundamentals show a mixed growth trajectory, with EPS growth surging 75.2%, but revenue declining 2.1%. The company beat last quarter's EPS by 5.9%, and Wall Street overwhelmingly favors a buy, with 35 analysts giving a thumbs up. Insiders have net sold shares, a cautious signal. With a market cap of $268 billion, Applied Materials' valuation is closely watched, but its PE ratio is not available, making it harder to gauge its price relative to earnings per share. The RSI, or Relative Strength Index, is at 49, indicating a neutral trend. The moving averages, which are like averages of past prices, are also giving us a mixed signal. We're below the 20 and 50-day averages, but above the 200-day. Key levels to watch are support at 324 and resistance at 374, with bearish momentum building according to the MACD. The real catalyst for Applied Materials is strong EUV demand, driven by chipmakers like TSMC and Samsung, making it a bull case with 81% of analysts giving a buy rating. The CHIPS Act supports domestic production, benefiting AMAT's US customers. Watch for the upcoming earnings report to see if Applied Materials can beat expectations again, specifically on April 15th. Today's top signal was Micron's strong buy. If you like this analysis, please subscribe, like, and comment below which stock you'd like us to cover next. Remember, this is educational content, not financial advice, so do your own research and consider that past performance doesn't guarantee future results. Thanks for watching Denver Stock Lab. We appreciate your support.